Welcome back. The market is down, and in the mid-cap market, it's a case of down and out. 1:5 on advanced decline. The first indications came on Friday itself, and of course, this rally that we had heading into the budget is getting sold into. PNB is your big stock of the morning, down 8% now on that stock. It didn't need a bad news. But it got one, and
it's just that all the capital now goes only for these things.
Yes. So anyway, Yes Bank, of course, still holding up, but the market's not looking good. Atul Suri is with us, CEO of Marathon Trends PMS. Atul, hi. Good morning.
Morning.
So today, of course, the screen looks bad.
I know.
But
horrible day to be on.
No, that's a day when you need to tell us
exactly.
That things may not be all that bad.
Yes. Okay. Let's discuss the Nifty first. Then we'll discuss themes because Nifty has been in a bull market.
Yeah,
whether it's because of 7 or 8 stocks, it's been in a bull market. So let's discuss that first.
In fact, I'll take a step back, Anuj, and we'll talk global markets. We've been talking about politics and we've been talking about budgets and things like that. We're actually forgetting that what's happening at the global scene. So we've had a global bull market that started at the end of December, let's say from Jan, calendar year, in dollar terms. We track about 50 global markets. We find that out of the 50 global markets, Jan to date, in dollar terms, 47 are positive. There are only 3 negatives. Okay. So when you talk of market breadth or global market breadth, you're talking about a 47:3 ratio. So the markets, global markets, are in a tear-away bull market. And the average of these 50 is anything between 12 to 14%. The range is 40% plus, which is Greece.
That's true.
In about the last 7 months. And the negative is max is Pakistan, which is about, I think, -16, which has its own problems. Yeah. So you have a runaway global bull market where I said, just remember the mean is around 14% plus minus here and there. And India in this scenario, dollar denominated terms, is up only 6%, 6 to 7%. So what you really have is a very, very big global bull market, and countries outperform or underperform depending on what are the domestic scenarios. And we've had our issues with NBFCs, we've had a question mark on elections, which is now solved, we've had a budget issue, we've had various other issues that are there. So what we do is running up into where we are right now, we realize that we are not a preferred, overbought or overtly frothy market. Even if you look at domestic sentiment, investors you speak to, you'll find 9 out of 10 people are bearish. If you go further and you look at the F&O data, you'll find that there is hardly any call writing.
Okay.
It is absolutely, the series is starting. The put writing at around 12,000, 11,900 is massive. It's record writing. But you'll find that that call writing is totally absent. So what we really get into this, yes, the screen is red. Yes, Asia is down, but we are not overbought, or we are not overtly optimistic, or there is not a massive unwinding trade to happen. So this is really a global scenario, which is very good. India is relatively underperforming due to its various issues. Now let's get to Anuj's questions on Nifty. So Nifty, of course, has been trying to push 12,000, not getting beyond that, is getting sold off. So I think 11,650, we are just slightly above that, was around the budget, election lows. So that becomes the immediate focus point, but that's again for short-term traders. But I think that there is a very big gap in the Nifty between 11,400 to 600. And I think that in case this pressure continues, we could get to those areas. However, I do not think that you are going to see a massive sell-off or some sort of, the sentiment is much, much worse than what actually is, I think, going to pan out in the markets. So I feel, yes, we can have another 2-3% fall in the markets to around 11,400, but I feel that the risk-reward ratio is better for the upside, because as corporate numbers start coming in, and if global markets don't have a major sell-off, I think you will start seeing certain positives playing out. So as I said, the screen is bad today, you can't deny that, but the fact is that you can have another 3-4% kind of decline, but at those points or at these points, there is no need to really panic and sell off. The risk reward, in fact, can get very favorable if we, correct a little more or thereabouts.
Okay. A lot of people have been clinging to the Nifty Bank as a better performer.
Absolutely. In fact, Lata, it's such a lead indicator, to the markets. Nifty Bank, I'm barring today, as of yesterday, was just 1% from lifetime highs.
Yes.
Even on Friday, the budget day, when the Nifty did a lot, the Bank Nifty was not negative.
Outperformed.
So you find that Bank Nifty is a clear leader and that is a sector that is showing immense strength by virtue of its weightage in the Nifty. For the market to have a massive correction, that area will have to collapse. So I feel that the area of strength, the area to be overweight, and we are overweight, is I think the banking and financials. As I said, one day is not what we are talking about, but that is a space of strength. That is where the lead indicator is, and that's the reason to be overweight there.
Okay, I tell you, today the market's move is about punishing the haloed stocks. Titan, look at HDFC Bank, Hindustan Unilever, United Spirits, HDFC itself, and even ITC has moved to the low point of the day. So today is now turning out to be a the pocket where people were hiding. That's been taken to cleaners for now. So some of these names are not looking up. But Atul, so in that case, what's the downside for the Nifty? Because let's see where the downside is, and then upside will take care of you if you buy.
I think I mentioned about this 11,400 to 11,600 gap.
If we break that,
then I guess you get to 11.1 and thereabouts. But I really, honestly, Anuj, for something like that to happen, you need a market that is fairly overbought. You find a certain amount of frothiness, or globally things kind of really start collapsing.
But in large caps, do you see this frothiness? For example, in HDFC Twins.
Right.
For example, in a Titan.
Right.
It's easy to say that, okay, these are stocks where, the management quality is good,
absolutely,
is good,
absolutely.
But everything is good at a price, and overvaluation is as big, a mistake as, perhaps buying junk, or is a big mistake. So
right.
You think there's a bit of a froth in the large caps?
See, there may be a little bit, but there is not massive speculative. These are not highly, how many people speculate in a HDFC or HDFC Bank? It is very often delivery-based volumes and things like that. So you will find that even most portfolio managers or fund managers are getting focused on these stocks because this is where capital preservation is happening. If you go outside, if you try to be too cute and try to pick up some of these other stocks, you realize that the price you pay is tremendous. Let's say if you're talking about banks, right? You're talking about HDFC Bank. If you go across in the PSU banks, barring SBI, you try any of these stocks and see what happens to like a PNB today. You get punished very, very heavily. The issue is that there is growth, there is earnings. Yes, they are expensive, but that is where there's preservation of capital. And in the last 2 years, it's been a game of preservation of capital. And that is why you find that these stocks are doing what they are. A few percentage here or there, on a few days. Yes, as I said, there may be a little bit of froth, but this is where there is preservation of capital. And as and when the new trend emerges, then you will find that will be the time to reallocate your portfolio, whether you want to go aggressive into some new sectors or new spaces in the market.
Okay, so give us a high for the Nifty over the next 12 months, 12 to 18 months, and what will take us there?
My personal target for the Nifty, because I feel that we formed a pattern, I've shared that before, is around 13,600 on the Nifty. And this is about 15-16% from where we are right now. What I really think the sectors that are really panning out, as I said, financials will continue to be leaders just because of their weightage on the index. You cannot take them away. But I think that you are finding green shoots or interesting things happening in some areas. Like infra is quite interesting. I think you're finding a good amount of traction in some of the infra stocks. I find that some quality real estate also is doing well. So what you saw, as I said, I don't know about today or yesterday, but what you saw was a little broadening beyond that. And it's interesting to look at those spaces. As I said, this thing will die out in a few days. It will cool off in a few days. It's going to be back to earnings. It's going to be back to global markets. And that's where I think, you will get back into more saner or sensible times.
Okay, just a couple of points. The mid-cap market, where the advanced decline straight away is at 1:5. Sometimes, when you have that kind of bombed out advanced decline, in second half, there's a bit of a recovery that's playing out in some names. And pharma and healthcare is making a comeback today. Sun Pharma, Apollo Hospitals, even Aurobindo Pharma. Right now, these stocks are at the high point of the morning. That's the Nifty Pharma. Any contra bets here on the pharma?
I think there are one or two specific stocks. I mean, I have one in my portfolio also. As I said, pharma has been a bombed out sector for the last 2-3 years. From being grossly overweight 3-4 years ago, it's something that had a complete exit. So I do have about a 5% allocation to pharma. But pharma also, I think, you want to be in the clearer spaces. You don't want to get into some of these messy stocks because they can take forever. The consolidation game can be long. It's like how you see in autos also. You don't want to be too smart. You want to bet on a clear winner because As I said, the markets as they are right now, preservation of capital is very, very important.
All right, we'll have to leave it at that.
Thanks,
Thank you very much, Atul, for braving the rains and
Yes,
coming over
and
to
these
our
markets.
studio. Yeah. No, there you are, the Sena boys, who's giving some bit of confidence.